for everyone that's just joining us. If we look at the spiders here, Mew, the spiders are yellow. Okay, what does yellow mean? Yellow means stay away. So there is no, since April, there really hasn't been any daily conviction in this. Okay, so the upside is going to be tricky with the spiders, as is the downside. So yeah, there is no conviction there. If you're looking at something shorter term, like a 15-minute chart, there's pockets of day trading conviction. Yeah, on the Qs, same thing too. From a daily perspective, earlier in the year, we had a fantastic move with conviction. And now it's just, it's vacillating back and forth. And essentially what we're doing is looking at potentially this does roll into something, into momentum to the downside. For, what was the other one I was looking at here? Oh yeah, YY. And this is something too that I want, and another way I like to use this tool is that when you get a squeeze, I mean, obviously the squeeze is one of my favorite setups. And this has actually happened a couple of times this year where it hits our target. Okay, now this, and Carolyn, if you're still on this is where I got super excited. I'm like, oh my God, Carolyn's gonna love this. So here's how I would normally do it, right? It's like, okay, and this is where we got out. We got out of this. It's like, all right, here's a squeeze. Here we are at the 1618, right? Well, if we were able to drill down, we would have seen that it's not done yet. So even though our normal setup is the squeeze and the 1272, 1618, you can see that the momentum just turned there. It's like, oh my gosh, well, isn't this extended? Well, there's volume coming into this thing. Okay, so it helps. That's where that's the other way I found it's like going, it just helps you hold on to those horses when those horses are in the mood to gallop. Same thing with AAOI. AAOI, if you remember this one, this was a great trade. So we came up and we got right to our 618 target, but this thing kept on going to $100. And with something like this, it gives us the confidence to hold on to it. So with Carolyn's levels, I would think the same thing where if you rally, so what's one I was thinking of here? NVIDIA, no. Gosh, there was one I was thinking of here. Maybe it was Apple. Yeah, so on Apple, yeah, so there's a couple of cool things for this too. Now, check this out. Now, if you get, so there's no squeeze here, right? No squeeze. We make new all-time highs. And so picture, and I don't remember what Carolyn's levels were, at that point, but let's let's do, gosh, what was it from here? Maybe it was here to here. I don't remember. Something like that. But you can see here, okay, so the stocks, here's Apple, making new highs, okay, with no conviction. It essentially, it gets right to that 1272 extension with no conviction. Guess what? It ain't going any further than that. So what I've really found is it's good is that it really acts as a good trigger, especially intraday. I mean, today Apple's falling, right? Okay, 78-minute chart, it's falling, no conviction. So you've got the momentum. And so here's the key with this. When you have momentum without conviction, and again, conviction is the dots. Momentum without conviction, typically support levels are going to hold. Okay, you got an uptrending stock. Obviously, if you're selling off into support, you're going to get some downside momentum, but you got momentum without conviction. Expect the levels to hold. Okay. On the other hand, is if you look at something like Chipotle's, right? And on Chipotle's, you have both momentum and conviction. So let's look what that, looking at what that means from a pure Fibonacci standpoint. It's like, okay, well, gosh, we get to, the 1272 extension. Is there more room? Yes, there is. And it's unconceivable that it's going to fall that much, but it's saying, hey, yes, there is some there. So that's the kind of stuff where it gets kind of fun. So once you get a tool like this, the obvious initial part of it is, okay, we're looking at conviction, and it was really useful today for, staying in Amazon. Okay, so we're, got into Amazon and was able to use this tool to have the, the confidence to stay in, that we weren't going to get run over and stuff like that too. But the nuances of this are pretty fantastic when you're able to kind of study the market's behavior as it approaches a voodoo line, as it approaches an extension, as it approaches one of Carolyn's levels. And if you've got, some momentum in there without conviction, guess what? Those levels are very, very, very likely to hold. But if it's approaching those levels and it's got momentum plus conviction, because sometimes it's like, man, it blew right through it. I wish I would have held on through it. Or it blew right through it. I wish I wouldn't have bought that falling knife. It acts as a good filter that way too. So I think you guys will really like it. I mean, this is the only reason, and I know, hey, look, I understand we'll get flack sometimes. It's going like, look, here's another class. It's another tool. How many damn tools are you going to make and try to sell us, kind of a thing? And, and the honest answer to that is that this is something where it's our workshop and it's fun. And these are not, these are certainly not tools that you have to have. If you're looking at this going like, well, that's not going to make my life easier, right? Then the super easy answer to that is, well, great, keep doing what you're doing. We'll be in the room, we'll be calling out trades. The only reason to release a tool is if it's something that, trading is, you're always constantly looking for an edge. You're always constantly, as you're evolving, going like, all right, gosh, what's a tool that could be something that's a little bit easier? What's going to make my life a little bit easier to use? And what's kind of fun about, doing this and having the resources here, it's simpler, is I can just call up Eric and say, first of all, I can see kind of like, okay, where's everybody struggling in this market? Eric, all right, so based on what they're saying, we can do this, this, and this. And then, anyway, if that makes sense. But I always just kind of look at it as like, on something like this, if we can spend some time on a Saturday taking a deep dive, really understanding the market, going into a tool that's going to make our life easier, it makes sense. If if all we did was the room, then we wouldn't do any classes, and really wouldn't be developing any tools. We'd just be in the room trading. But anyway, I like it. It's fun, and it's just a way to set it up that way. So it's always, hey, if you're interested in this kind of stuff and you want to take deep dive, here's the opportunity to do it. If you're like, well, I don't, I've got enough stuff, I'm comfortable with the markets, then yeah, obviously don't do it. Everything, it's good. So anyway, that's the way it's kind of set up. Oh, why am I using price bars instead of candles with the 10x indicator? So I go back and forth on it. Sometimes I like price bars because it's easier for me to see when it's closing. Sometimes with non-standard candles, I can sometimes like, okay, is that an up bar or a down bar? Like if you look at this with the candles, it doesn't, just because if it closes up or down, it's still solid. Like sometimes it's confusing, but the bar charts to me are not. Yeah, and and Bob, and I'm fully conscious of that too, because what we don't want to do is just, so just so you guys know, originally when we had, oh my gosh, there's a huge storm heading right for us. I just looked out the window. So originally when we started thinking about this class, it actually was not going to have an indicator associated with it. We're like, okay, look, we've got enough indicators, right? But wow, it is like sheets of rain outside. But the idea here with this, and then, is the class forces me to do a deep dive as well. And it's like, okay, well, as I'm looking at this, I'll sit there and talk to Eric and say, look, these 5 things that I like to look at, it's kind of a pain in the ass. It takes a lot of time. And based on the challenges I'm seeing in this market, can we take these things that I'm looking at and can we just code it on a paint bar to make all of our lives easier? And he was like, give me like a day and let me see if I can do it. And what struck me was, if you guys remember what was it, 2 Thursdays ago after my surgery, we woke up, the NASDAQ gapped down like 30 points and just kept on going. And I remember on that day because, we'd been, I was sitting there holding longs going like, okay, just watching the market. Is this thing going to turn around? Is this thing going to turn around? And I remember that day, Amazon going down like 20 points. And Yeah, let me find that particular day. I think it was right. What day is that? The 10th. So if we look at that, oh, is that how far that goes? Let's see. So that, what happened on that day? It went from 975 to 950, I think. Okay, here. So, and I remember on that day going like, okay, if we look at this break right here, and you can see as it kept going, volume kept pouring into it. Okay, and the idea is, okay, where is it? Because on a daily chart, if you're looking at something, it's like, oh, it's just pulling back, you know, but support's not holding. But this is something that's a tool we can use. Like, wow, the selling is actually really serious here. And if for some reason we were long, we want to get out and even reverse and go short. And you know what I love about this too, in relation to pricing structure. Okay, so here we have some pricing structure. Um, you know, this is, you've got kind of a, you know, a formation here, and what we want to understand is that, is this going to hold or not? Okay, and you know, this is just, it's kind of neutral readings. It's neutral readings. Now notice the squeeze here. The squeeze fires off long, but there's no conviction in this. Okay, you got a little bit of momentum here, but no conviction to the upside. Another one, nothing. It's staying yellow. There's no volume. Nobody's buying this. Okay, now it starts to drift. Now we do not have a squeeze here telling us there's a short play. Now this is the part where it gets interesting, because in this kind of a market, things can happen fast enough where there's not enough time. Now, a squeeze ended up coming up over here after it broke, but like, okay, it's breaking. Now, is this going to be the flush, and now we just reverse and go higher or not? Well, there's conviction, okay? And when there's conviction, you buy and you hold on for the ride. Now, if you're looking at something on a normal setup, okay, a normal setup is, all right, you know, here's the low and here's the high. So, you know, I'm bearish Amazon. I'm buying some puts, and I'm looking for it to go to the 1272 extension. You know, great. Or the 1618 extension. Great. But what about those days when it just keeps on going? Because what's going to happen is the further it drops, the bigger the deltas your options are going to have. So instead of you starting off with, say, you know, maybe a 60 delta put, well, down here, it's 100 delta put. So with the further it goes, then with every dollar, you're making more money. Here, if it drops $1, you're making 70 cents. Here, if it drops $1, you know, you're making 80 cents. Here, if it's every dollar, you're making, you know, you're making $100 per option. So if you can hold on to a move like that, you get a month, you know, it's exponentially better. So that's the kind of market we're in, though. And we just want to have some tools that, all right, if this is going to break, is it going to be, you know, is it going to really break, or what's going to, you know, what's happening there? Gosh, where was the other one I was looking at too? Oh, okay. So if I'm pronouncing your name right, Gottlieb. So two things with that, and that's a great question. So right now, obviously, we've got the indicator for TOS, for TradeStation, you know, Ninja Trader 7, and I am in the process of talking to Tasty as well. For those of you that, like, for example, you're in Australia and you're like, you've got Options Express, or you've got something else. So the couple of options there are, first of all, TradingView is a free platform. And you can, I believe, put up to 3 indicators, upload 3 indicators on their platform for free. So we are coding it for that. Okay, so that's an option. The premium version of TradingView is not that, it's pretty reasonable, and it'll allow you to add more. So you can, and I'll show you a screenshot here of that, of what that looks like. So if you're familiar, TradingView, they do a good job. This is, you know, this is what it looks like on TradingView. So this is Bitcoin, and you can see, you know, here's the squeeze, and so that's an option, and TradingView is free. And then the other part of it is, you don't, you know, I'll show you the guts of it, and it's a combination of, DMI plus, DMI minus, a specific level in ADX. We got momentum, we got volume, and things like that. And I'll just show you how I do it, so you can look at the raw guts of it on a chart too. Like with the squeeze, it's the Bollinger Bands and the Keltner channels. And so what I do, before the squeeze was coded, I would just look at the Bollinger Bands and Keltner channels. Oh, interesting. Hey, hey, Eric, are you fleeing the coast, or are you guys going to stay down there? I mean, you guys can come crash at my house in Austin if you want to. You're good? Okay. Famous last words. Does this indicator actually incorporate or replace some of our other indicators? So, it incorporates. So what it does is it brings into a couple of combinations of things. So we don't have anything that's like it right now. But the question is there something that because of this we'd want to get rid of something else? So it depends. It depends on the market. So on a a regular kind of a bull market, I like the PSAR bars. Like, hey, if it's bullish and trending, and if it's blue, we just buy it. But there's no neutral, okay, and there's no conviction. What we can't tell with this is where's the conviction. Okay, yeah, it's coming down, but is it coming down a little bit like this and then it's going to reverse, or is it coming down with conviction? So these PSAR bars are actually pretty good. But all they tell us is it's bullish or it's bearish. It doesn't tell us when it's neutral. It doesn't tell us when there's conviction to the upside, and it doesn't tell us when there's conviction to the downside. Okay, so that's a subtle kind of a tweak. And then if you look at the early warning indicator, the early warning indicator is simply a reflection of the squeeze. Okay, so what the early warning indicator does is just tells us, hey, the squeeze is about to fire. So the early warning indicator, and in fact, I've been trying to figure out a way to have, the early warning, the whole purpose of the early warning is to say the squeeze is about to fire. So what that is a reflection of this momentum in relation to the Bollinger Band. So it's not, it's not looking at price, and it's not looking at any of that stuff. It's just telling us, hey, literally, it's an early warning on the squeeze. Does this replace the launch pad? So that's, that's a good question. Let's put that on here real quick. Now, the part that the launch pad helps with is that if there's a volume associated with the squeeze. So if we go and say, and we look at this, we can see like, okay, here's a squeeze with volume. That's great. And let me zoom in on this a little bit here. This is kind of interesting as to how it worked out today. So we've got a squeeze setting up here, with some volume. Where's the one I'm looking at here? Because I was looking at this earlier. So you can see with the launch pad, what the launch pad is telling us if there is volume associated with the squeeze. Okay, and that's super useful to give us an idea like, okay, is this squeeze going to do something? It won't tell us, though, if there is conviction coming into the market when no squeeze is present. So it's actually a good combination. Like, wow, here's a squeeze setting up. There's some volume kind of coming in, getting ready to go. And then after it takes off, is it going to last? Is that thing going to last? So it's a good combo that way too. Does the 10x trade have anything to do with the DMI explosion trade? So it doesn't. It's not the same. So the DMI explosion is a combination of DMI plus crossing DMI minus. And by the way, I'm going to go over the setup because we just added it to the scanner with a combination of stochastics and 10 and 20-day price channels. And what we're looking for is a moment in time when those all converge. Okay, and that gives you kind of that turn. Okay. And they're great for reversals. And we're going to go over those on Saturday. And I'm going to give you guys copies of the scan, which you can do on TOS. Plus, we're adding them to the scanner. to find those reversals. What this does is it looks for, it's not pinpointing when a reversal is going to happen. It's just all the things that we talked about here, where are we getting conviction into a trend or not? Let me see, get rid of this. Oh, I did the wrong one. So on Amazon here, let me go back a little bit further. Oh, let's see. Oh, I thought I just changed it to 30 days. Didn't I just change it to 30 days? Yes. Okay. So on Amazon, what I'm going to be looking at here is we've got this huge swing low to swing high, right? So if this thing's really going to go, okay, we got that swing low to that swing high, then a potential 1272 extension is going to be down here at $884. Well, the only way that's going to happen is we've got to start getting some conviction, okay? And there may not be time for a squeeze to set up. But if we start seeing, some conviction showing up on this, okay, and the reason I'm going to be interested in that, because if we go back and we retest this low right here at 926, okay, at 926, if we can get down there, first of all, that'll be a very profitable trade for what we have right now. But secondly, what I want to see is it going to be able to crack? Because if it falls through that, we could violently come down here, and that could be a huge trade. Or if it comes down here, it could turn around and rip higher. Well, this tool is going to tell us, like, okay, look, there's more conviction piling into this, or no, it's drying up and we need to get out. Yeah, conversely, on the NASDAQ right now is being helped by Apple. Okay, and if you're looking at this on a 195-minute perspective, yeah, great. There were some amazing moves here in July. This is when I got back from Africa. If you guys remember, one of the best weeks of the year is when I got back from Africa. Look at this. I mean, everything had so much conviction in the NASDAQ, okay? And when the index has conviction, then guess what? The underlying stocks are going to move too, and that was an amazing week. But what's interesting here, and this is the part that I think is so critical, okay? I mean, check this out. So you've got a squeeze. Now it's like, okay, here's a squeeze to the long side on the 195-minute chart. Okay, we're golden again. It can't get anything going. Not only is there no conviction, we can't even get the momentum. And that's telling you that squeeze is going to fail. That squeeze is going to fail. And same thing here. Look at this. And that's actually a good looking squeeze. That squeeze fails. Okay, we don't get any volume or any conviction or any momentum to the upside. However, when we finally broke here, okay, first of all, we did not have a squeeze to give us a heads up. And so when we broke, it's like, okay, what's this thing gonna do? Look at the conviction in this thing. Okay, look at the conviction. Now, once it starts to go like that, that's on August 10th. Once it starts to go like that, then you can drill down to a smaller time frame and to say, all right, so what price point was that? 58.60, give or take. Was that here? Oh no, I'm not going to be able to get back that far. Darn. Yeah, right here. So now we can look and see. So here it's like, okay, great. And then we can drill down to like a 15-minute chart and just start to look for the volume to dry up. As soon as the volume starts to dry up, as soon as the conviction starts to dry up, you're generally going to start getting a pretty decent retracement. Okay. But that's where I find it's handy, because the thing is when you get a down move, you really want to, when you get those panic moves to the downside, that's what you're looking for. We know that they're going to end at some point. And, you don't want to, the worst is this, okay? The worst is you're short, you got so much money and now you can't believe it came all the way back. This happened really quickly. So it's easy to get very, very emotional in those kind of moves. And just all of a sudden it's like, man, I just lost all those profits versus like, up, volumes dried up, get me out. Okay. So, well, on Amazon, now remember, okay, keep in mind on a daily chart, there's no conviction. Okay. It's just kind of doing its thing. And that's great. We're keeping an eye on it. And as we drill down and we're starting to look and see if this thing's going to go, what we're looking for is, in this case, on the 15-minute chart, we're starting to see conviction coming in on the breaks. And that's where it starts. Now, if this rolls in and we start seeing conviction on this time frame, this thing is toast. Okay, so we're starting to see some conviction on the smaller time frames that allows us to hold it for these moves. That's when things could get really interesting. So that's just kind of how we look at it. I mean, right now, the conviction on the shorter time frame is what can drive us to the prior lows. Okay. Now, if we come down to these lows and there's no conviction on the 195-minute chart, guess what? This is going to hold and we're going to bounce. But if we start driving down these lows and we start seeing panic and we start seeing conviction on this time frame, then we hold on for the ride. Yeah, so good question. So what happens? So here's a good example of volume drying up. So and what we don't, if you're doing shorter term kind of trades and stuff like that. So when we look here on, say, a 5-minute chart, we can drill down if we're in a position and we've got to move here. Okay, so if we look at this and it's like, all right, these are the kind of things you start to look for. It's like, all right, let's say we got Amazon, right? And we're like, wow, this thing's really going. Okay, now it starts to bounce. So this is kind of the first red flag. Okay, well, first of all, it's bouncing, but it's not showing any change. It's not turning yellow. Okay, so if it starts to turn yellow, then we can kind of see that the conviction to the downside has run out. Now we don't, we're still red, so that's fine, but we're watching on something like this, like, okay, man, if these bars turn yellow, then this thing is telling us that it's over, right? Because what we're looking at, remember, this is a 5-minute chart, and we're playing a bigger move here. And then it's like, okay, we're coming along, and it's like, all right, well, cool, we're making new lows. Here's the red flag here, though. We're making new lows without an increase in conviction. So that's your first, like, well, okay, maybe this thing is done. And then as you can see, it's coming along here, it's coming along here, boom. Once you start to see that, so again, trying to be as objective as possible. Let's assume we have no idea what's going to happen and we buy some puts here. Okay. It's like, where do I get out? Well, you could get out here. That's fine. Maybe that was a target. But, we're getting a light volume bounce with no change in momentum. That's a good sign. But the red flag here is when we make new lows, no conviction. Okay, so that's a red flag. So you could get out there if you wanted to, but then the icing on the cake is here. And then you can see what happens is that this is how it gradually turns into a panic short covering, okay? If you're short, you're like, oh my God, get me out of this. Oh God, this sucks. And look at that, this explosion. Okay, that's what we don't want. And if we're objective, okay, if we're unobjective, then, we're taking our profits too fast. If we're objective, right, then, okay, that's an awesome trade. And we don't get stuck in this. And that's the worst, when you have these down markets like this and these volatile markets to the downside, which is what we're in. It is very difficult to hold on to these down moves because you get your head ripped off on something like this, and it makes you distrust the short side, when in fact the short side is the best side to be on. It's the most fun. You've just got to know when to get out, because when it does reverse, you're always going to have buy the dippers. Okay, so you've got buy the dippers, but in a down market, you've got buy the dippers combined with short covering, which is also buying. So these retracements can kick you in the teeth. And you can have massive profits in your bearish position evaporate like that. So this is that fine line between, you don't want to get it out too fast. Okay, you don't want to get out too fast, but at the same time, it's just, what's the Goldilocks and the Three Bears? This porridge is too hot, this porridge is too cold, this porridge is just right. We don't want to get out too soon. We don't want to get out too late. We want to get out at the just right time. Yeah, and we'll have checklists and things like that too. And remember, when you're looking at exit rules, we're going to be combining it with very specific targets like we always do, right? So the idea with something like this is that, the best way I can explain it is for targets, okay? What did I just do? And this is a good example of why we do the classes, because it's going to be a deep dive into this stuff. So here's here's this move on Amazon, right? All right, so we come down into the 1272 extension. So that's a target, right? That's what we're looking for based on all of our rules and stuff like that. Here's we got short squeezes, and we do come into the, we come down here and we come into the 1272 extension. That's great. And you can see from here that the volume immediately dries up. And so the question is, do we hold on to, now, first of all, we already know if we're going to hit the 1272 extension, we're going to take half off, and we're going to move our stop loss down, right? So either we're going to get stopped out right away, or we want to know, because really when it comes down to the 1272, the question is this going to keep going or not? And in this kind of market, that's really what you want to understand, because that's where the money is going to be made. So if we look at, say, here's a micro rendition of it. So if we look at, here's a 5-minute chart, right? And you're going to look at, say, okay, well, here's, that's not what I wanted there. Remove drawing. And again, we're going to go through this in depth tomorrow. But just to kind of give you a flavor of some of the things that I like about this is that, if we're looking at this and say, okay, great, there's a squeeze setting up, and we're going. So, here we are at the 1272 extension. There's no let up. We're slamming into the 1618. There's still conviction. Okay. So that's when you kind of get the idea of, wow, this thing could blow right through this level and keep going. All right. It's just like, bam. So that's the kind of stuff we want to look at. And the nice thing about down markets is that although the reversals are abrupt, okay, like this. Imagine, you buy some options, put options at 10, right? And then, here they are at 25. And before you know it, you're back to where you were. And that's the worst thing that can happen. But if you can get into something and then have, just say, wow, this thing's got more to go, okay? And even when it's retracing here, it can't even almost push back through that 1618. So hopefully that makes sense. So I'm gonna have a checklist of this stuff. And look, I don't spend a lot of time looking at 5-minute charts, but it's easier to kind of see some examples and things like that are setting up. Bigger picture, what we're looking for is on something like an Amazon is, does it turn into a Chipotle's? Okay, so you've got, it's mixed bag. Wow, we're getting some conviction. We're getting some momentum to the downside plus conviction. And that's the kind of stuff that can lead to a crash, which is what we want. Yeah, so the main thing is you can do this on any time frame. So you do, you kind of do this on the time frame that, fits best. You can do it on daily charts. If you happen to be looking at the markets full time, what I like to do is, drill down into those 5-minute charts, and keep in mind that, we are, even if you're working full time, we're still going to be making use of targets. You want to have specific targets and things like that too. We just don't want to get caught in any reversals. And so, you can look at it even setting alerts and things like that too. John, I'm thinking you'll have a lot less positions in a down market. So in a down market, in a slow trending bull market, although I like to keep my positions ideally about 7 to 10, I'll sometimes go to 15, because you get a combination of stuff. If you've got a really fast moving down market, I generally don't want to have more than about 4 positions. Give me an index trade, maybe something on the VIX, and 2 stocks, because I want to be able to get out of them. That's directional, but I'll still throw on some call credit spreads and things like that too. Yeah, so here's the interesting thing about this. And so here is where you kind of get So in Chipotle's, okay, so we're coming down to blue dot stop. So when the blue dots stop, you're essentially going, all right, this thing looks like it's done. So you could just get out. I mean, obviously that's a pretty fair trade from 420 down to 340. Or you could say like, well, let me drill down a little bit here and just let me see if I get some yellow, let me see if I at least get some yellow bars telling me that the momentum is done. And we'll go, and I've got checklists for all that stuff, just so, if we're looking at this and I'm talking free form, I can dive into all kinds of stuff, but it's a fairly straightforward checklist that we'll go through. Facebook. So if we look at Facebook here so this is actually pretty interesting. So on a daily chart, we've got positive momentum, okay? But you can see we're starting to get this kind of downward action, and we do have a squeeze. So we drill down to the 195 and just kind of see what's going on, and you can see that we've got momentum rolling over, but really no conviction yet, okay? And it's kind of very similar to the NASDAQ itself. If we look at the NASDAQ here on a daily chart, yeah, this is kind of, not on a daily chart, yeah, we got some, some stuff happening on this particular day. But if we look at it right now on the 195, we got some volume today. We've got a squeeze setting up here. I like the prospects of this thing continuing to move lower next week. So I like the idea that, hey, we've got puts on Amazon and the NASDAQ here is teeing up. And what I'll be doing with this is that if this continues to go lower, I'll definitely be looking at this. If we come down, because this is going to be the make or break level. If this goes, this thing could get annihilated. So that's what I think it'll be. I think it'll be helpful that way. Again, for me, it's just like going, okay, what are ways to help make what I do easier, what I look at easier? So ISRG obviously has had a fantastic run, and it's just kind of neutral here. And you can see that we had this great squeeze. Of course, there were earnings, but it hasn't caught fire. So not bad. I bet from eyeballing that, that went right to its 1272 extension, maybe a little bit more. Yeah, so we went, that's a normal move, right? And so this is the difference between a normal move and like an AAOI. AAOI, it just kept on going. It had that, action in there. Or YY kept on going, had that action in there. Alibaba kept on going. I mean, how fantastic is this? And Baidu, and you guys remember that huge wedge that Baidu had, and then once it broke, it was just like, just kind of, oh, okay, blah, 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 blah. And what we've seen here is we saw, it's like, okay, well, yeah, it looked, we had this huge wedge here. Okay. So why, why does this one, why does this one work so well? Because when it breaks out, conviction is pouring into this thing. Like people are panicking trying to get in. And that's the kind of move that lasts. So that's what goes on there. So anyway, I don't know. Is any other questions on that? But anyway, so we're going to just dive into the nuances of this tomorrow. Let me see if this works. I probably should sign up for the class so I can get in. Oh yeah, and you can do PayPal and stuff like that too. Oh, I was gonna check Bitcoin. How's that doing today? You can. It works on Bitcoin as well. Wow. So I've been selling Bitcoin into this. I had like 10. So I've been selling into this. I sold 3 last week. I sold 3 this week. And then I think what's going to happen is Ethereum is going to make new highs, and then Litecoin is going to make new highs. Yeah, and I would just say, again, and I one of the things that pops up, and I am not one to shy away from any questions or anything like that. And one question that will come up is, you know, why why are you pushing this class on us? Why do I got to buy the damn indicator? Somebody had sent an email about that today. And the truthful answer to that, you don't have to do anything. The idea is that in the room, you'll see me using this. I will be using this to manage my trades. You'll see me doing it, and you can follow along. And that's frankly the easiest way to do it. If you're interested in just kind of taking a deep dive and saying, well, actually that tool looks kind of useful, and I would actually, okay, let me dive in and kind of learn the nuances of this stuff, then that's the idea. It's like ongoing education. So it's like, hey, I want to learn accounting, so I'm going to go, I'm going to register for an Udemy course, or I'm going to, go to night school or something like that. And it's the same idea here. If you're comfortable with where you are, and it's like, hey, this isn't stuff I need, then I highly recommend you don't need to do anything, because I'll be doing this stuff in the room. If it's something, so I just think of it as it's like an elective. Hey, if this is something that interests you, great. I'm very passionate about it. I'm going to have a lot of fun with it. I'm going to put together checklists and try to make this as easy as possible for everybody. And the goal is that any money spent on this class, I just consider it as an investment that we recoup as quickly as possible, utilizing this information and utilizing these tools. And that's kind of my challenge for next week during the live trading. No, that's awesome, Angel. Well, and again, it goes back to, I just remember sitting there post surgery on the 10th and watching the markets fall, going like, okay, we're in situations here where we have long trades that opened up the day profitable. The markets are starting to fall. We're not really near our stop losses, okay? But the question is, do we want to get out and reverse? And this is a specific tool that we can look at that says it's not subjective. And I try to avoid doing things that are subjective, because I know that can be confusing. But this is a tool that says, no, it's not subjective. Even though your original target was up here and your stop was down here and we're nowhere near that, it's inappropriate to be in this position any longer, and we should reverse. Yeah, and that's actually a good way to sum it up. We can figure out how to use an iPhone, but a tutorial allows us to explore all it has to offer. And yeah, it's a good summary. So this indicator works great with the voodoo lines. And so this is how, and I don't have this on TradeStation yet, but what you want to look at here is, so if we look at Amazon, so so, and that's the other part of this too, is that, why can't I turn this? Oh, there we go. So what we want to look at here on something like Amazon, okay, if we look at these voodoo lines, is it going to hold? So, when we see this, it's like, wow, here, Amazon comes down to this voodoo line and holds to the tick, right, on the 23rd. But here it blows right through it. Well, how do you know that? First of all, those levels are where the action is at. Okay, that's where the decisions are being made. And we just want to see who is interested, who is raising their hand at that moment in time and participating. Because if we're going to approach that voodoo line with conviction, guess what? We're going to blow right through it. But if we're going to approach that voodoo line, with not much, action going on, so let me find where those are. Remove. So it's like right here. So if we go and we look at this, we can say, okay, well here it's coming down and there's no conviction. Okay, so here's that. This is the skyline here at 954.42, and that's what I'm trying to replicate here. And so we know that the voodoo line is a decision point. So this could be a voodoo line. It could be one of Carolyn's levels. So we're coming down there, and yes, of course, we're moving down. We get some momentum, but no conviction, right? And we come down again, and we get a little bit, a little bit of conviction there, but it quickly switches. But now we come down again, and look at this. You get conviction right through it, and it just continues. And that's the stuff that makes you money right there. Is it going to hold? Or is it going to break through? So do you buy the dip, okay, or do you go with it? And that's the kind of stuff. And again, we're going to be going through a lot of nuances like that, where I just found it's like, man, this thing, hey, look, Amazon's gapping up. I wonder, should we fade this? Should we fade this gap up in Amazon? No, there's total conviction in this move. There's total conviction in that move. So anyway, to me, I get excited about things that, one, make my life easier, and two, make it easier to manage trades, and three, you're like, oh, that just makes that easier to make money on this. And what's nice about this is what happens is you can just kind of you don't have to look at everything. Pick 5 stocks and just start watching them and just playing the nuances with them. So entry and exit points. And so the other way here is to use it is, okay, so let's say that you're in this trade with Amazon, right? So, okay, wow, we got some conviction here. We're going. So when do you get out of this? Because now this thing is just off and running. Well, it's coming down, here, great, it blows right through it. And then when we get to 940.90, okay, we get to 940.90, which is right here. Okay, so we know that there's a voodoo line here, right? I'm drawing this one right here, and it comes down and there's no volume, all right? So it's kind of drying up. There's no conviction. So, it's telling you like, hey, you can get in here because it's going to go, and then it's run out of gas, so you can get out. So, instead of getting into something that just has a little small move up and a fake out, you have the confidence just to hold on to it. And this thing, that's a pretty darn good move, going from $955 to $940. So anyway, it's just stuff like that I think just makes it a little bit easier. In the NASDAQ the other day, I was watching this. Where was this? I think it was when the NASDAQ was rallying. Yeah, I think it was right here. So the other day when the NASDAQ was up really strong, it's like, man, we got some momentum. But, you can just kind of see how it just kind of fizzles out. And when you start, this kind of no man's land, you typically start to roll over at that point. So, you can just kind of, stay in as long as there's momentum. And right here, same thing. It's like, we don't have a 15-minute squeeze telling us to get in, but when you see that there's a break in the action and it's going, it's like, wow, this thing is just kind of cruising along. So anyway, hopefully that makes sense. I mean, this stuff to me is just a lot of fun. But the main thing is that you'll know the difference between where's the one I was looking at here the other day? It's the difference between gosh, where was it? Oh, maybe it was the S&Ps. There's one here where the idea with it is just kind of, especially like in using it with a squeeze, is especially if you get a spiders. There's one squeeze I was thinking of, if I can find it. First, I'll have all this documented for the class tomorrow. Oh, right here. So check this out on the spiders. So here we have, it's like, wow, here's a squeeze, right? Well, the squeeze goes, there's no momentum at all. There's no momentum, no conviction. Guess how that squeeze is going to end? So, anyway, stuff like that. It's just once you understand the nuances of this, it just makes it a lot of fun. No, so Job, I love that idea though. Testing it with the ATR trailing stop. No, I love that idea though. All right. So anyway, hopefully it's helpful. Again, for those of you that are interested, this class, which will start tomorrow at noon, if you go to simplertrading.com/formula, that's the page. You absolutely do not have to do this if this is not your thing. I will start, next week. Most of my time live trading is going to be in the class, of course, but in the room, I'll start using this stuff. But what you can, obviously, this is something where it's like, okay, if you've got other trades that you think you'll be doing, other than what I'm doing, or if you just really want to take a deep dive into this, the class would make sense. And I do think very strongly that it'll pay for itself many, many, many times over. But now that you understand the concepts and think, well, you know what, I can just look at price and volume and all this stuff and figure this out on my own. I don't need the class. That's awesome. You don't need to take the class. And I get it. And you won't hurt my feelings at all. Deep dives like this for me are fun. And for anyone that wants to dive in and do that, that's what we're going to do. So yes, it's the indicator, and we're going to be talking about the nuances of it. But we're also just going to be talking about the nuances of these kind of markets that we're in, how to trade them. We're going to have checklists around that. And if you're interested in this, there's a couple of easy ways to do it. So, this probably is the easiest, is that with this, we'll do the class tomorrow. You get the indicator, and if you're newer to options, you get that. Now, keep in mind, we're also going to be doing some stuff on futures as well. You don't need to know how to do futures, because if we do something on the S&P futures, guess what? We can buy puts on the spiders. And then the main difference with this and then the professional package is that this includes 3 days of live trading. And the live trading is really fun. That's kind of like, that's where the rubber meets the road, so to speak. We'll also schedule up a follow-up day after you've tried it for a couple of weeks. And then we're also going to have a 10x scanner where you can find, instead of staring at Amazon going like, when is this going to turn into a 10x trade? You can scan for stocks that are in the midst or beginning a potential 10x trade, meaning a momentum plus conviction trade. And then the Elite just includes all that. Plus, if you don't have our scanner, we do have a scanner that has 20 plus other scans, plus it would include this one. If you already have the scanner, not as critical. And anyway, hopefully that all makes sense, and that's what we're doing. All right. Whew. So now I should probably get to the point where I actually rest my vocal cords for tomorrow. Yeah, and look, guys, and I really do mean this sincerely. I try to give you guys enough information here that you understand what we're doing. You don't need to take the class, right? So there's a lot of information there. You can look at volume and price and figure it out on your own. So hopefully that makes sense. As a trader, I get very excited about if any new tool that can make my life easier or any updated concepts, and that's just, I'm kind of a ongoing student of a couple different things, and one of those is the markets. And so for me, it's fun. It's if you haven't taken a class with me before, I typically at the end of a class, everybody's very, very, very glad that they did. If they weren't, I wouldn't keep doing them. And for me, it helps me kind of clarify, because it's an excuse for me to kind of redo all my charts, get things cleaned up and rocking and ready to go for the next quarter. So it's also kind of a quarterly checkup for me, where I can go through and just make sure that all the tools that I'm using are most currently adapted to the markets that we have. All righty. All right, guys. Good luck for those of you on the Texas coast. Well, I appreciate it, Angel. And and it doesn't. The thing is I get it, and it's okay. I can take it. If anybody here wants to fire bullets, please, fire them at me. You can leave everybody else alone. I can take it. Um, but you know, if this stuff for me is fun, it's my passion, and I'm happy to do it. And you know, I'm really conscious of, and I know that look, the last couple of weeks have, you know, in terms of this entire year, I would say the last couple of weeks have been the toughest. And it's tools like this that take the last couple of weeks and assume that if that's going to keep going, that we are going to click right back in sync. You know, we want to, it doesn't, whatever the markets are going to throw at us, we can handle. And it's just making sure that we've got, you know, the mindset and the setups and the strategies and the tools to do that. And go back and extract some cash from the markets. All righty. Awesome, Kathy. And look, my dream is that, you know, it took me 8 years to figure out how to do this in a way that I got comfortable with the ebbs and the flows and the stuff like that. And, you know, for whatever reason, and I don't understand it, but I do enjoy the process of kind of teaching this. I think part of it is probably selfish because it forces me to be better. And if I'm better, my results are better. So, you know, that's maybe part of it. I don't fully understand it. But I also like it when, you know, challenging questions that help me to rethink things. I've found trades and strategies just from people in this room that are looking at things that I'm not looking at, and I appreciate that. And so it's just kind of continuing to move towards the idea of, you know, having a room of people all on the same page, trying to help each other out, and, you know, let's go in there and take some money from Wall Street and enjoy the rest of the year. Let me ask Daniel. So if someone can, because I'm not sure, is the trading view indicator ready or is that still being worked on? It is ready. Okay, perfect. I think that's what that was. Am I going to the Trader Expo in November? I'm actually not sure. I know there's a conference in Phoenix I was going to go to on the 3rd and the 4th, and I think the expo is on the 2nd, 3rd, and 4th. I might ping them and see if I can pop in there on the 2nd. Yeah, well, so far, I mean, it's been a great year for trading. The last couple of weeks have been like, you know, it's like kind of going through hamburger, but, you know, still very, very good year. The squeeze, I believe, is also available for TradeView as well. Yes. All right, guys, I'm going to start grabbing some charts and getting ready for tomorrow. I definitely have some more work to do on the slides. I'm going to be putting on the coffee, but super excited about it. For those of you that are joining us, looking forward to hanging out with you tomorrow. Everybody on the coast, stay safe, and you guys have a fantastic weekend, and we'll see you then.